Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 27th of June, 2019. We're talking about financials, paused or consolidated, or kind of boring actually right now, but they are setting up a breakout. We'll start tonight's video with a focus on financials in the XLF itself. This is our sector spider of the ETF financial sector grouping. So what's going on right now? Starting with the left side of the chart, not much. The market is consolidated or compressed between 2750 and about 2650. We're almost in the midpoint, which is 27. So what else might be happening? Not a lot in terms of consolidation or this chop between this really 50-cent range through June. And while that's boring, we can also look over here at the ADX. The ADX is our average directional index. And what this is used for is consolidation and expansion. So when markets get compressed or trade sideways for a while, the next move is likely a breakout. When was the last time financials saw an ADX of this value? And that's roughly at this moment about 12, even down to 11. So when was the last time we saw an ADX indication this low? Well, that was back in September, late 2018. What was the market looking like at that point? Similar, compressed, sideways, chop, especially over here. So what was the next move for the market? Big downswing. So that's not necessarily a downswing, but we are getting ready for range expansion in the financials. And again, that's indicated by this cyclical low to high, high to low of the ADX. ATR is just a average true range for stop losses, targets, and expected moves for the intraday basis. And of course, our implied volatility. As we go through a few of the stocks in the XLF tonight, just keep in watch on the ADX. Anything under 15 is considered compressed, ready to expand or break out. And of course, your ATR, average true range, intraday. And we're looking at implied volatility. We'll start with Goldman Sachs. I'll go ahead and update the trend lines on Goldman Sachs, which takes us to roughly the 185 per share level. And then if we connect these, it's about 200 per share. There's a little bit of a push to the middle point at about 210 per share, but just for planning purposes, we're going to count this as about 202. We'll also take into account this expiring cone, or the probability of expiring cone. And that gives us ideas for any type of range expansion and where it might take us for a certain date and time. Again, the ADX for the Goldman Sachs is low. It's about 12 at the moment. ATR, one of the lowest periods in 2019. And in fact, that's been frozen, roughly speaking, at about the 3.5 or $3.50 per share area. And that just means you can expect on a daily basis about a $3 up or down move. That is small, clearly lower than it has been. And of course, implied volatility, a little bit creeping to the upside, but we can always look closer, has been flat. And then back on the other chart. So what we're going to be talking about as we go through these stocks is not so much to do right now with positions, but getting ready for any type of breakout that occurs beyond these spots. Again, range contraction late 2018 led to a range expansion event into the latter part of 2018. So while 2019 has been kind of a nothing burger, as they might say, we're looking for any type of breakout beyond. And Goldman Sachs, $210 per share. That sends it straight up. Probably, or at least more logically, anything under 185 and 180 per share opens up the downside pathway. Again, look at the ADX and how low that's been compressed and how long this ATR indicator has remained flat. It is creating similar patterns in 2019. Bank of America. We'll update this. We'll actually have a trend line from earlier that pulls it to about the 27.50 per share level, and we'll update from earlier as well at about $30 per share. So Bank of America has maybe a buy opportunity to play the range to trade back up to 30 per share. Of course, we are focused like a hawk on the 27.50 per share level, and beneath that, 26.50. These were little stab and reverse or trick traps, bear traps that led to a push back up to the high. So again, ADX is going to be low, average true range is low, but implied volatility for Bank of America, that's a little bit higher. That is 0.27. So as we look into this, this is our probability of expiring cone with a potential bounce play to the upside just in terms of the next week, 2 weeks, maybe 3 weeks at best. But again, we're just getting ready for that breakout opportunity. JPMorgan. This one has a wider trading range on it. So updating it takes it to $111 per share, and about 106 is your lower pivot. 112, kind of a recent high, and it's in the middle of that. Again, not a lot you can do with the market in the middle of a sideways trading range. We do await the breakout, in this case above 112, or, as we might think more logically, but can't guarantee, of course, beneath 105. Our probability of expiring cone keeps us inside this range, and of course, our ADX indicator right there at the lows for 2019. When was the last time we saw the indicator this low? Really was March, and that led to a little trap and then all the way up here. So this preceded that compression, low ADX, low ATR value, preceded, in this case, roughly a $20-ish rally. The same thing here. Low average true range, low implied volatility, low ADX, suggested preceded, same thing, a $20 fall, a second compression, and then all the way down to about $90 per share. For Citigroup, we have the same thing. So if we're looking at compression, we can update this trend line. That's what I'm doing in the video with you, is live updating of just really price trend lines, horizontal trend lines that give us guidance. Once again, Citi is in the middle of the trend line area between 72 and about 64.50. There isn't much we can do at this point. Just make observations that these stocks are compressed now and getting ready for a breakout later. It might not be next week, but it's something to keep on our trading radars if we're trading these stocks intraday or putting on any positions. Of course, financial stocks in general are key to the market. If you want the market to go higher, you generally want financial stocks to support it with higher highs. You're not seeing that. If you want the market to fall and go lower to the latter part of 2019, you probably want to see financials weak. Right now, they're doing neither. They're flat, consolidated, getting ready for a range expansion. It's almost like they're building energy for a future breakout event. And a couple more. Wells Fargo actually is in a downtrend. It's the one stock, or the one main financial stock, doing something somewhat interesting. Given that we have this downtrend, lower lows, lower highs, falling parallel trend line channels all the way down, and of course falling moving averages. Its ADX is also low. So again, we can just compare when that ADX was lower in prior periods. Really, that was September 2018, later in November 2018, and all the way through here in 2019. So range contraction, expansion, contraction, expansion. That could lead to any type of breakout play or trend continuation play once we get these breakouts, given the price is, well, same thing, at the midpoint of its falling parallel trend line channel. That's about $46 per share. We'll finish with Morgan Stanley. It is a consolidated, compressed. We'll update our trend line. That takes it to 42 per share. We don't have clear trend lines here, but we'll put them about 45 per share. Again, Morgan Stanley is at the middle. Nothing to be that interested in right now, but we will be interested in the future breakout that comes from these low ADX values and, of course, the middle of trading ranges. Once we get breakouts from here, that's where the positions will be. That's where the activity will be. But until then, as always, be careful, be patient, and be safe. And this is Corey Rosenblum with your Theo Nightly video for June 27th, 2019.